The anatomy of a U.S. paycheck. Have you ever looked at your paycheck and wondered where all of your hard-earned money is going? It can be overwhelming to see a list of deductions and taxes without fully understanding what they mean. However, understanding the anatomy of a U.S. paycheck is crucial in managing your finances and planning for the future. In this video, we will break down the different components of a U.S. paycheck and explain how each one plays a role in your overall earnings. Deciphering your pay stub gross versus net pay. When you receive your paycheck, one of the first things you may notice is that there are two numbers, the gross pay and the net pay. Understanding the difference between these two figures is essential in grasping your overall earnings and managing your finances effectively. Let's start with gross pay. This is the total amount of money you have earned before any deductions are taken out. It includes your hourly wages or salary, as well as any overtime, bonuses, or commissions you may have earned during that pay period. Gross pay is important because it represents the full value of your work without considering any taxes or other deductions. On the other hand, net pay is the amount you take home after all deductions have been subtracted from your gross pay. These deductions can include federal and state income taxes, as well as other mandatory deductions such as Social Security and Medicare taxes. Voluntary deductions, such as contributions to retirement accounts or health insurance premiums, may also be subtracted from your gross pay. The result is your net pay, which is the actual amount of money that will be deposited into your bank account. Understanding the distinction between gross pay and net pay is crucial for several reasons. First, it gives you a clearer picture of your overall earnings. It allows you to assess how much you are actually making and evaluate whether it aligns with your financial goals and needs. Additionally, knowing your net pay helps you budget and plan your expenses accordingly. It gives you a realistic understanding of the amount of money you have available to cover your bills, savings, and other financial obligations. Mandatory and voluntary deductions explained. When you receive your paycheck, you may notice various deductions being taken out before you receive your final net pay. These deductions can be divided into two categories: mandatory and voluntary deductions. Understanding the difference between these two types of deductions is crucial in fully grasping your paycheck and managing your finances effectively month to month. Let's start with mandatory deductions. These are deductions that your employer is required by law to take out of your paycheck. The most common mandatory deductions are federal and state income taxes. These taxes are based on a percentage of your earnings and are used to fund government programs and services. Additionally, Social Security and Medicare taxes, also known as FICA taxes, are mandatory deductions. These taxes go towards funding Social Security benefits and healthcare for retired individuals. On the other hand, voluntary deductions are deductions that you choose to have taken out of your paycheck. These deductions are typically optional and can vary from person to person. Common voluntary deductions include contributions to retirement accounts, such as a 401 or IRA, health insurance premiums, and flexible spending accounts, FSA, for medical or dependent care expenses. These deductions are deducted from your gross pay before your net pay is calculated. Understanding mandatory and voluntary deductions is essential because they can significantly impact on your net pay. Mandatory deductions are required by law and cannot be waived, while voluntary deductions are up to you to make and at your discretion. It's important to carefully consider your voluntary deductions and their impact on your overall financial situation. For example, contributing to a retirement account can help you save for the future, but it may also reduce your take-home pay in the present. Federal and state income taxes. Why do they differ? One of the most common deductions you'll see on your paycheck is for federal and state income taxes. But have you ever wondered why these two types of taxes differ? Understanding the reasons behind this can help you make sense of your paycheck and better plan for your financial future. Federal income taxes are collected by the federal government and are used to fund various government programs and services. The amount you owe in federal income taxes is based on a progressive tax system, meaning that the more money you earn, the higher your tax rate will be. The federal government sets tax rates in brackets each year, taking into account factors such as inflation and economic conditions. On the other hand, state income taxes are collected by individual states to fund state-level programs and services. The amount you owe in state income taxes is also based on a progressive tax system, but each state has its own tax rates and brackets. This means that the amount you pay in state income taxes can vary depending on where you live. Some states have higher tax rates, while others have no state income tax at all. So why do federal and state income taxes differ? The main reason is that the federal government and state governments have different responsibilities and funding needs. The federal government provides funding for national programs such as defense, healthcare, and social services. State governments, on the other hand, provide funding for programs and services specific to their state, such as education, infrastructure, and public safety. Benefits and retirement contributions in your paycheck. Benefits and retirement contributions are an important part of your paycheck that can have a significant impact on your overall financial well-being. While these contributions may reduce your take-home pay in the short term, they may offer long-term financial security and peace of mind. Benefits can include a range of offerings from your employer, such as health insurance, dental and vision coverage, life insurance, disability insurance, and retirement plans. These benefits are often a crucial part of your overall compensation package and can save you significant amounts of money in the long run. For example, having health insurance can help you avoid higher medical expenses, and a retirement plan can help you build a nest egg for your future. Retirement contributions, such as those made to a 401k or IRA, are an important way to save for your future. These contributions are typically deducted from your gross pay before taxes, which means you can save on your tax bill while growing your retirement savings. Additionally, many employers offer matching contributions, which means they will contribute a certain percentage of your salary to your retirement account. This is essentially free money that can significantly boost your retirement savings over time. Understanding the benefits and retirement contributions included in your paycheck is crucial for several reasons. First, it allows you to assess the overall value of your compensation package. While a job may offer a high salary, the benefits and retirement contributions can greatly enhance the overall value of the job. Second, it helps you make informed decisions about your financial future. How does overtime, bonuses, and tips affect your take-home pay? One of the great perks of working is the potential to earn additional income through overtime, bonuses, and tips. However, it's important to understand how these earnings can impact your take-home pay. Let's dive into how overtime, bonuses, and tips affect your overall earnings. Overtime is when you work more than your regular hours in a given pay period. It's a common occurrence in many industries and can significantly increase your paycheck. Typically, overtime pay is calculated at a higher rate, often 1.5 times your regular hourly wage. This means that for every hour of overtime you work, you'll earn extra money. However, it's essential to remember that overtime pay is subject to taxes, just like your regular earnings. So while it's exciting to see that extra income, it's crucial to consider the tax implications and how they may affect your net pay. Bonuses are another way to earn extra income. They can be given as a reward for exceptional performance or as a part of a company's compensation structure. Unlike regular earnings or overtime, bonuses may be subject to a different tax withholding rate. Depending on your employer's policies and the size of the bonus, a portion of it may be taxed at a higher rate. This means that the net amount you receive may be less than the gross amount of the bonus. It's important to keep this in mind when budgeting and planning your finances. Tips are a common form of additional income in certain industries, such as food service or hospitality. They are often received in cash and are generally not subject to immediate taxation. However, it's important to report your tip income accurately when filing your taxes. Failing to report your tips can result in penalties or additional taxes owed. It's crucial to keep track of your tips and report them accurately to ensure compliance with tax laws. Understanding your rights regarding earned wages. As an employee, it's essential to understand your rights regarding your wage. In the United States, there are laws in place to protect workers and ensure they receive fair compensation for their work. By familiarizing yourself with these rights, you can ensure that you are being paid accurately and fairly. One of the fundamental rights regarding wages is the right to be paid at least the federal minimum wage. The federal minimum wage is currently set at $7.25 per hour, but some states have higher minimum wage rates. It may also vary from state to state. It's important to know the minimum wage in your state to ensure you are receiving the proper compensation for your work. If you believe your employer is not paying you the minimum wage, you have the right to file a complaint with the Wage and Hour Division of the U.S. Department of Labor. In addition to the minimum wage, you also have the right to be paid overtime for any hours worked beyond 40 hours in a work week. Overtime pay is typically 1.5 times your regular hourly rate. This means that for every hour worked over 40 hours, you should be paid an additional 50% of your regular wage. However, there are certain exemptions to overtime pay, so it's important to understand if you qualify for overtime or not. If you have any questions, please consult with your accountant or tax attorney, since we are not tax professionals. Another important right regarding wages is the right to receive accurate and detailed pay stubs. Pay stubs provide a breakdown of your earnings, deductions, and taxes. By reviewing your pay stubs regularly, you can ensure that you are being paid the correct amount and that all deductions are accurate. It's important to note that these rights apply to most employees, but there may be exceptions for certain occupations or industries. Additionally, some states have their own specific wage and hour laws that may offer additional protections. Understanding your rights regarding wages empowers you to advocate for fair compensation and ensures that you are being paid what you deserve. Paycheck transparency. Paycheck transparency is an important aspect of understanding the anatomy of a U.S. paycheck. It refers to the accessibility and clarity of information provided on your pay stub. Employers have a responsibility to provide employees with accurate and detailed pay stubs that clearly outline their earnings, deductions, and taxes. Paycheck transparency allows employees to have a clear understanding of how their pay is calculated and ensures that they are being paid accurately and fairly. Transparent pay stubs provide valuable information that helps employees verify that they are being paid the correct amount and that all deductions and taxes are accurate. By reviewing their pay stubs regularly, employees can catch any errors or discrepancies and address them with their employer. This transparency is crucial in maintaining trust and confidence in the employer-employee relationship. Additionally, paycheck transparency allows employees to understand how different factors can impact their take-home pay. For example, employees can see how overtime hours, bonuses, and tips affect their overall earnings. By having access to this information, employees can make informed decisions about their finances and plan accordingly. Paycheck transparency also plays a role in promoting fairness and equality in the workplace. By providing employees with clear information about their pay, employers can ensure that there is transparency and consistency in how employees are compensated. This transparency can help prevent wage discrimination and ensure that employees are being paid fairly based on their skills, experience, and qualifications. Furthermore, paycheck transparency can empower employees to advocate for their rights regarding wages. If employees have concerns or questions about their pay, they can refer to their pay stubs and use them as evidence to support their claims. This transparency helps create a level playing field and ensures that employees have the necessary information to protect their financial well-being. In conclusion, paycheck transparency is crucial in understanding the anatomy of a U.S. paycheck. It allows employees to have a clear understanding of their earnings, deductions, and taxes, and ensures that they are being paid accurately and fairly. Paycheck transparency promotes trust, fairness, and equality in the workplace, and empowers employees to advocate for their rights regarding wages. Subscribe with us and learn. If you find the information in this video valuable, please subscribe to watch more videos like this and also share it with family and friends. Please let us know your feedback in the comment section below and write, "I subscribed." Please hit the like button and the notification bell to be notified. There's more waiting to be learned in our next video. The contents of this video are for educational and informational purposes only. Please click on the 2 videos shown here to watch and learn much more on various financial topics. Thank you for watching.